down. I'll do that before I come to bed, all right? Alrighty, alrighty. Yes, good morning, or should I say good evening. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader. We're going to get ready to do some investing. I'm going to catch my breath. You like the aquarium? All right, anyway. Let's get started. It is 9:10, 10 past 9, Monday night, week number 17. Is it week 17? Hold that thought. Let's pull this up. Is this the one? April 2025. There we go. Today is the 21st, which is week number 4. Is that right? Yeah. Week number 4 for the second quarter, also known as week number 17 for the year. So week 17 for the year, week number 4 for the quarter. We got a bunch of questions already lining up. Let's get ready to go start. Scotty, you joined the morning class and would like to ask some questions at the end of it tomorrow. Absolutely, Scott. That's what it's there for. Okay, the morning group is specifically for those people that want to ask questions and be walked through one thing at a time. So learning how to set your account up, learning what to do, what questions to ask, what stocks to look at, what is the outcome you're looking to get, and is there a way that we can do it together without losing anything? So, what do we have over? What do we have happening over here on YouTube? So, YouTube, Luigi, good evening. Tank is looking pretty nice. Yeah, we got a couple of nice fish in there at the moment. I got 14 crayfish. 12 fiddler crabs, 6 giant angelfish. Anyway, we're going to be having a, what do you call that? A fish party in a couple of weeks. People are going to come over, enjoy the fish tank, and, donate some fish because, people like to watch it. I put it on live on YouTube, and like 300 people a day watch it. It's like, that's crazy. Is what it is. Let people enjoy it. Why not? All right, so we are week number 4, just starting today. Now, there's 13 weeks in every single quarter. We are in the second quarter of the year. Can you believe it? The second quarter is already here. As a matter of fact, the second quarter is almost done. We got this week and half of next week, and then we're into May. Like, holy cow. It just keeps on rolling and rolling. Sunny Bobby, good evening. Kennedy Irving, hello. Elijah Fentress, good evening. Limitless Vibes, good evening. Andy on pause. Good evening, Andy. All right, so who do we have here on TikTok? We get Mac over here, Doc over here, KB, good evening, KB. Who else we have over here? David, Teddy, Drew, Mom's YouTube. All right. Robbie, good evening. Joseph, Freddie, cool. Mark, Doken Pause, cool. Atporlux. Is the 10-minute trader your TikTok also? Absolutely. Anytime you see a video of mine, it's, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader. All right, so we're going to be working on another TikTok station specifically for younger people. I'm talking younger people, like my grandson's 5 years old. Some of you may have seen him. So we're actually going to have a way for a very young people. And it's designed specifically for grandparents, such as myself, and my grandson only being 5 years old. To, instead of, giving him toys, candy, and all that kind of crap, just give him some cash. Invest it with him. Allow him to make some trades, pick up some good stocks, and then being able to spend some of that money. So he's going to make some money, learn how to invest, and be able to kind of manage his own money, but with certain strict rules to it. Andy on pause. I'm a Theron. And that is a big community of people that are like furries, but not exactly. That's okay. It is what it is. I don't judge, hey, as for every saddle, what good for some people is not good for others. It takes all kinds to make the world go round. You have fun with that, Andy. Let's keep on going. Grammy Liz, how are you doing? Angelina, is that right? Okay, thank you for that. Donald Decos, how are you doing? Bear Leaguer. All right. David Andres, can you address the fact that my Michigan real estate buddies are liquidating their partials? David, it's got nothing to do with me, but okay. All right, is what it is. We wear masks and tails. All right, good luck with that one. John, good evening. Yes, sir. Okay, so now we over here on this other TikTok channel. Let's say hi to everybody here. Who do we have? Yo Tessiden, okay, good evening. Eric, what's going on? Ernie J, what's happening? Apfel Struden, okay. Jatinder, cool beans. Marty, Big Daddy Pizza's in the house. Vet, good evening. Anthony, good evening, Anthony. Josh, good afternoon. Buns, Todd Vegas, Willow, Schmack, Big B-Rad Daddy's in the house. Cool beans. All right, John, hello. David, good evening. David G. Bill, good to see you, James. So what to do we have for your trade stocks? Yep, we'll be right there. Bonsoir. Ah, mon chéri, comment ça va toujours? What's that, Nancy Love? Good evening, Nancy Love. Bill, good to see you. James, so what do we have? Okay, we're going to take a look at some good stock trades. Just give me a minute. Just got to say hello to everybody. It's a little bit more challenging nowadays that we have a lot more channels and a lot more people coming in. Bill, week 17, is that right or wrong? Yes, week 17 for the year, week number 4 for the quarter. Okay, remember, week 4 for the second quarter, week 17 for the year. Well, I thought that was fake. It's so bright and vivid. No, actually, that's real. That thing's about 8 feet long and it stands about 6 feet tall. It's about 360 gallons. That's what I used to manufacture many years ago. Artificial coral reefs for museums and aquariums. Okay, David, sorry, I thought you were the stock market guy. Yeah, I am, David. We're just saying hi to everyone first before we jump in and get ready to go. Actually, let's get rid of the fishies and bring this over there. All right, bye, fishies. I needed a screensaver. That's what that's for. You can look at it this way. A very expensive screensaver. Okay, just look at it that way. Who said that one? David? Just think of the aquarium as a very expensive screensaver. All right, partials are pieces of property, 20 acres left. Yeah, David, I get that, but I do stock market. I do investing for weekly cash flow. I don't really have anything to do with real estate. Definitely not real estate up in Michigan. I've been through Michigan a couple of times. All right, anyway. CNI, what the heck is CNI? Oh, CNI. Wolf wants to take a look at CNI. All right. All right, well, let's bring it up. First one on the list, CNI. Is that even a stock, CNI? There we go. Let me open this up a little bit more. All right, hold on. That going right there. And right. Whoops, too far. Right there. And let's bring it down a little bit. Right to there. All right, that should be good enough. All right, so CNI. Uh-oh, let's get out of here. We don't need. There we go. It's a monthly. Holy cow. Okay, so who just asked for CNI? Wolf. Now, Wolf 78, dude, you've been here for a little while. Okay, this is not your first rodeo. Means this is not your first time here. So I don't do monthly optionable stocks. Okay, 16 May, 20 June, 18 July, 17 October. Those are months of the year. I don't do those. Hold on, let's go right to here, here, and here. Okay, Wolf, 25 April, 2 May, 9 May, 16 May, 23 May, 30 May. These are all weeks. Okay, weeks of the month, not months of the year. So I do weekly options only, no monthly. So CNI is going to be a no. Sorry about that. KB, how are you doing today? Charlo, howdy. Hey, Melatonin, how are you doing today? All right, Wolf wants to take a look at Procter and Gamble. Now, Procter and Gamble, that's a good one. That one I can get behind. Procter and Gamble, over 100 years old. How can you go wrong with a company that's been around for over a century? Having an issue on that phone. All right, anyway, it's the high. Here's the low. Here's where it was. Here's where it is. There's a lot going on here. Really can't tell, any really good movement. Up, down, all over the place. Right now we're at 165.75. That sound like a good price for Procter and Gamble? I don't know. Well, let's take a look. At 165, the 165 is going for 355. The 167 is going 299. The 170 is going for 1 to 160. Well, they all sound pretty great. Now remember, we are into, this is Monday evening. So Monday evenings means we're getting set up for tomorrow. Tomorrow's Tuesday. It's the second day of the week. So if you didn't do your trades today, you have officially lost 20% of the possibilities that you could have gotten. Because on a covered call on a weekly, specifically a weekly, first thing Monday morning, 9:30 a.m. Eastern Standard Time until, at 9:30 a.m. is the beginning of the week. That's when you're going to get most of your time value, first thing Monday. Because from Monday morning until Friday afternoon is the maximum amount of time that is available. So Monday's gone, so that's 20%. So we only get 80% of time value left for this week. Okay, Tuesday, Wednesday, Thursday, Friday, 4 days. All right, so CNI is going to be a no. Procter & Gamble, well, the numbers look okay. Let's take a little deeper look into this chart and see if we can make heads or tails out of it. Because it looks like there's a lot going on. Look at all the movement. Up, down, up, down, up, down, up, down. Whoa, that's a lot of movement. However, when I'm looking at the chart, I want to look at the highlights. I don't want to look at all the detail because what happened 6 months ago, 8 months ago, 9 months ago, a year ago, doesn't really matter for the upcoming couple of weeks coming up. Well, because I'm only concerned about this week, next week, and the week after. Because what happened already, I can't do anything about. But why I'm looking at it is because it gives me an idea of the flow, the motion of the ocean. Which direction is it going? Well, up, down, up, down, up, down. Now what's going here? She went back up again. Now she's pulling back. It looks like she's pulling back kind of big today. It looks like it might be just, no, yeah. Here's our last 30 days. So this is going to be a no only because here's your 30-day high. Here's your 30-day bottom. She shot up. This is where we should have jumped in here. We should have jumped in Procter & Gamble a week or two ago. Not this week because she went up. Here's your high right there on Thursday. Well, today is starting the profit taking because from here, 156 to 172, that is 156, 66, 76, 23. Was that $25? Well, that's a nice move. From there, yeah, profit taking. So profit taking started today. So Procter & Gamble may be good in 2 weeks. So let's push it off to 2 weeks from today. Procter & Gamble. All right, so Procter & Gamble maybe in 2 weeks, not this week. Terribly sorry, dude. Let's go. Who's got something next? We get made in front of. But that doesn't stop us. Okay, Andy, I'm not quite sure where we're going with this. What do you think about almond milk stock? If it doesn't have 20, all right, see, you're under the impression that I look at anything. No. I'm only looking at companies that have been in business for over a quarter of a century, which means they got to have 2 decades of profitability. Almond milk hasn't been around that long. And I don't think there are any almond milk companies that actually have 20 or 2 decades, 20 years of consistent profitability. Okay, that's what I'm looking for. Okay, what do we have? Scott wants to take a look at CF and GSK. CF, that consolidated freight. CF Industries. We'll take a look at that. That looks nice. Well, first thing, always, if once you've been here for a while, you'll notice I do the same thing over and over and over again. Well, because if it works, then stick to it. All right, so here we go. I'm looking for 5 things. 1, the high. 2, the low. 3, where was it a year ago? 4, where is it now? And 5, what is the overall motion? Okay, down, up, down, up. Well, that's simplified. Well, I don't want to make it complicated. I want to make it simple. I don't need to see all this movement. I see it. I know it's there. But the very first thing I want to see is to make sure the, let's say I want to take a look at simply a brief look. It takes 3 to 4 seconds to see the high, low, was, is, and the movement. If that is good, if I'm not at the high and I'm not at the low, I'm somewhere in between, fine. Let's go and take a look at the numbers, and is it going to be financially feasible to actually do this trade? Well, okay. Currently, we're at 75.13. 75.13, so the 75s are going for 120 to 160. Well, that's over 1%. Now, for those you don't know, I'm looking for a simple, safe, predictable, consistent 1% per week. That's it, just 1% a week. Now, I know it doesn't sound like a lot. A lot of you here probably thinking, hey, I get it. I want to look at a good stock and have it go through the roof and retire in 3 days. It doesn't work that way, at least not here, because that's not what I'm looking for. What I'm looking for is simplicity. Okay, so I got a simple trading strategy. Safety. Okay, I'm retired. I don't want to have to go back to work for someone else. Okay, now I did work for myself before. I manufactured artificial coral. I want to have it to be predictable. I want to know what I'm going to make before I put any of my own money into it. And I want it to be safe. Simple, safe, predictable, consistent. I want a certain, it's strange because, you ask for something, create a trading strategy that gives me what I'm looking for. Well, that's the only thing I want to do. And it's the same every single time. 5 things. High, low, was, is, all the kind of nice, neat, fun stuff. Great. That works. Now, if I'm going to be buying it first thing in the morning, I'm going to be paying $76.50. So, wait a minute, no, 75. So the 75 is going for that. The 76 is going for this. So either way, I'm getting 1%, no matter which one I'm looking for. Now, when the market opens first thing in the morning, all these numbers are going to change. But what is not going to change is the mathematical equation. Okay, the mathematical equation is simple. What am I buying it for? Well, that would be this price right here. Number 2 is, what am I selling it for? Well, if I'm buying it for 75.13, because that's the last traded price, the closest price is going to be the 75, which would be here, and it's $1.20. Okay, now $1.20 is more than 1% of 75 bucks. Okay, so that being said, let's move forward. So the numbers work out great. Now I want to take a deeper dive into the chart to see what the chart is telling me. Because what I'm looking for specifically is what are other people like me and you, because you here want to buy and sell stocks. Well, there are a lot of us out there. Believe it or not, there's a lot of people out there that want to buy stocks and are looking at this one. Well, how do I know? Well, basically, it tells me right up here. 1.4 million shares of this company traded today. 1.4 million. Now, if I'm going to buy some, I'm going to buy 100, 200, 500, maybe 1,000, maybe 5,000 max. That's for me. Okay, because I know what my limitations are. At a $75, I'll be lucky if I get 5,000 shares. Okay, but 1.4 million shares traded today. So there's a lot of us out there looking at this company. There's a lot of us out there looking at all of them. So we want to make sure, what are they thinking? What are they doing? And that is told by all these numbers here. Okay, so there's 5 numbers that you need to take into consideration when you're looking at a chart. 1, the opening price of the day. 2, the closing price of the day. 3, the high price of the day. 4, the low price of the day. And 5, how much volume. Okay, how many shares? How much interest is there? Is there a lot of buying and a lot of selling? Well, these blue lines down here shows the volume. And every once in a while, you'll see a big spike. Okay, that means it's a volume spike. I love volume spikes because there's something happening in there that we don't know of, that, well, something in the news maybe, I don't know, but there's something. You don't get a volume spike for no reason. Okay, it doesn't go from 2 or 3 million people to 30 million, wait a second, 2 or 3 million shares to 30 million shares for no reason. There's always a reason behind it. So anytime you see a volume spike, it's like, okay, what happened there? I want to know. Well, certain things. 5. Opening price, closing price, high, low, and volume. All right, so this tells us what we are thinking, because when we buy, okay, stocks go up. When we start taking profits and we start selling, the stock price comes down. That's it. When it goes up, we're buying. When it comes down, we're selling. Something's going on. So let's take a really good look. Say, CF, a year ago, 79.13. Okay, the high of the year was in January, the 3rd week of January. Okay, 90 days ago, which is 3 months ago, this is it. The high, the low, where was it, where is it now? You can get a good idea by looking at the 90-day chart of where it's flowing, okay? She goes down, then up, and then down, sideways, back down. Now she's going up. We made the bottom of the year right here a couple of weeks ago. You're going to make most of your money buying low and selling high. Well, stocks go up, then they come down. Then they go up, then they come down. Then they go up, then they come down. The idea is find a good stock. Find a bunch of good stocks. Buy them when they're low, and then sell them as they move. Oscar, another crash incoming. Oscar, we don't know. Oscar, okay, what I'm doing here, Oscar, is looking for a good quality company that's going to weather the storm. What do I mean by that? Well, the stock market's been around for 400 years. A lot of crap has happened in the last 400 years, and the stock market's still here. Okay, well, let's just take the last 100 years, or 120 years, something like that. Well, what has happened in the last 100 years or so? Well, we've had World War I, World War II, Korea, Vietnam, everything over in the Gulf, Desert Storm, all that crap. What else did we have? Well, we had the, what do they call that? Stock market crash of 29, the crash of 87, the crash of 2000, the crash of 2008, the crash of 2021. Okay, and we've had a lot of other economic downturns. We had the oil embargo. Remember that in the 70s? Well, what about the Great Depression in the 20s and 30s? The companies that I'm looking at, the ones that are cream of the crop, Procter & Gamble, Lowe's, Home Depot, Bank of America, Wells Fargo. Some of these companies are over 100 years old, and they consistently increase their dividends. Oscar, the percentage of S&P 500 stocks below the 200-day moving average is the same as 2022, 2020, and 2008 crashes. Okay, Oscar, I appreciate that. Thank you very much. A lot of stocks have lost over 50% of their valuation within the last 12 months. Okay, it's not what I'm looking for, Oscar, sorry. It's not what I'm looking for, Oscar. What I'm looking for is a good company that has a nice cash flow going with it. Now, the valuation, the stock valuations, or the prices of the stock, well, that's the public's perception of the value of the company. It's not actually the value of the company. The value of the company is in the fundamentals. What is their cash flow? What is their profits look like? Okay, do they consistently increase their profits? Do the dividends increase consistently? What is going on behind the lines? Okay, so you got to take a look at book value, cash flow, earnings per share, revenue per share, and management in place, and the consistency of profitability. Those are the important things. So what if I buy a stock at 96 and now it's down to 68? Is it bringing me in 1% every single week? That's what I'm looking for. Okay, so as the stock drops, yeah, I get it, but I drop my strike prices along with it, but I have them far enough away so I have cash flow, but I don't have as much risk. Because no matter what you do, you're never going to get away from risk. You just got to balance it out. Okay, so while I'm balancing out my stock, well, I want something good to support it. Well, that support, in my opinion, is going to be a good quality company that is consistently profitable. That makes sense to me. Now, I come from an age group, they call us what, Gen X. Okay, we look at things a different way. If it works, leave it alone. If it ain't broke, don't mess with it. Okay, I've been doing this strategy since 2008, 2009, but I've only started sharing with the public in 2011. And in 2011, it was just, what do you call that thing? Blog. Okay, it was a blog post. Okay, from 2011 until somewhere like, I think it was 2011 to 2013, 14. Then it went to video. But from video, it was a video from 2014 all the way up until 2020 before we actually went live. 2021, I think we went live because someone put me in front of a camera and said, hey, you can go live once you get a certain amount of people following you. And I thought, oh, well, alrighty then. Well, now we're broadcasting on 7 different channels. We got a shitload of people. But the message is still the same. The stocks that I'm looking at are still the same stocks. Because if you have a company that's been profitable for over 100 years, well, why would I change from that one to something else? Now, I don't do the shiny object. I don't. So if you're looking at companies that are hot now, I'm probably not going to buy them because they don't have 2 decades of consistent profitability. Let's get back to what we're doing. Enough of this blah, blah, blah crap. So anyway, the 90-day looks great. If you look at right here, what's happening now in the last couple of weeks, here's the bottom right here. You can see that clearly. Bottom is here. Now we got a week and a half of going up. Well, that looks pretty great. Let's zoom in a lot tighter. Look at just the last 30 days. Because the last 30 days are going to give you a better idea of where you think it's going to go next. Well, you know, looking at a 1-year chart, great. Well, a 1-year chart's not going to tell you where it's going next. Okay, this chart will tell you where it's going next. 30 days ago, we're at 77. We shoot on up to 81, and then we drop back down. Because you're at 81. Okay, well, now there's profit taking. People take profits, and boom, finds the bottom right here. Okay, once you find the bottom, people thinking, hey, wait a second, consolidated freight at 67? Well, hell, I'm going to buy some. So they buy it at 67, and all of a sudden, now it's at 76. So from 67 to 76, that's 19 bucks. So 19 bucks on a $67 stock, that's almost 30%. That's a big jump from here to here. So how much further do you think it's going to go up before there's profit taken? Because but that's not 20 bucks, that's only 19 bucks. Yeah, from 67 to 76, 9 would be 60. No, 10. That's only 9 bucks. All right, so 9 bucks is around 13% increase. Still, that's still a nice increase. There may be profit taken, there may not, but it is definitely going up. So the question should be in your head is like, do I like this company? Do I like this company at this particular price? Am I willing to hold on to it as long as I can until whatever. Raul Mendez, what do you think about YieldMax ETFs? They do all this for you. Yeah, they do. But what? Okay, hold on, Raul. He's got a point. Because YieldMax does this all for us. Let's get out of here. Okay, let's pause that. And it's not here. Yahoo Finance. Okay. Now, we're going to take a look at some YieldMax. Okay. So Raul Mendez mentioned something about YieldMax. Okay. Amplify. Okay, I kind of need a ticker symbol from YieldMax. Raul, if you don't mind, give me one of these ticker symbols that you're so jolly about. Yes, it pays monthly income. Yeah, I get that. I need a ticker symbol. Raul, give me a ticker symbol. We'll pull it up, and I'll show you what the difference is between what I do. TSLY. Holy shit! How did I figure that one out? TSLY. TSLY. All right. Historical data. Okay, Raul, we're going to go in and check and see how consistent YieldMax increases its profitability. All right. Dividends only. Now, the reason why I'm looking at dividends is because dividends are a portion of the profits that the company gives back to investors. Okay, so the problem I'm having with YieldMax, okay, Raul, you ready? MSTR looks like a breakout is close. Hold on a second. So, Raul, are you seeing this? This is the dividends. Now, a dividend is a portion of the profits the companies give back to the investors. That's us. We're the investors. So when the company is profitable, they share those profits. Got one minor problem with YieldMax. Do you see this right here? January 10th, 2023. Well, that means this company's not even 2 years old yet. It's 2023, 2024. So it's what? 1 year? It's 1 year. It's not even 2 years old, 3 years old yet. 3 years old. Most companies don't make it past 3 to 5 years. This thing's about 3 years old. 2023 is the very first dividend it paid out. I'm looking for 2 decades, which is 20 years, not 3 years. Okay? There's a big difference between 3 years and 20 years. Okay? So let's take a look at the numbers. Now, when I say consistency of profitability, that means each and every number should be higher and higher and higher and higher. And I'm going to show you one that actually does that. So when I say consistent profitability, let's look at the numbers. You ready? 199, 180. Say, hold on. Raul, is 180 smaller than 199? So if the very first dividend they give me is 199, the second one should be higher than 199, not lower. Okay, so why would I give my money to a company that's not profitable? Because from 199 to 180, then to 160, then to 88, that's going backwards, dude. That's less and less profits. Oscar, Johnson & Johnson, yeah, we'll take a look at that in a minute. So let's keep taking a look, okay? So 199, 108, that's lower. 108, that's lower. 165, that's lower. 88, that's lower. Then it goes to 160, 210, 166, that's lower. 117, that's lower. 115, that's lower. 117, 120, 111, that's lower. 81, that's lower. 68, that's lower. 64, that's lower to 1. So that's 11 times already. So that's more than 50% of the time. The stocks go up, stock goes down, stock goes up, stock goes down. This is not consistently profitable, dude. No way whatsoever. Now, we can keep on going. 196 lower, 81 lower, 109, 59 lower, 122, 128, 71 lower, 71, 57 lower, 46 lower. See, I'm not quite sure what's appealing about this. Number one, it's 3 years old. Less than 3 years old. That's number one. Number two, it's not consistently profitable. Let me show you what consistency of profitability is supposed to look like. All right, Raul, check this out for a second. Maximum all the way back to 1986. We're going to go all the way to 2000. All right, 2003. All right, you ready? 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Every single year, it's higher and higher and higher. It's more than 25 years old. That is where I want to put my money, not into whatever that thing was that you were looking at, YieldMax. YieldMax doesn't have the consistency that I'm looking for. It still pays a lot higher than any other income ETF. All right, well, let's go back a little bit. TSLA. Alrighty. Page isn't responding. That's never a good thing. Well, we're having a little bit of issue. Oh, Page isn't responding. Damn it. All right, let's get out of that thing. My tea. Gotta have my tea. All right. Let's see if it's back up again. Having issues. All right. I'm not going to deal with it. All right. Needless to say, Raul, I don't like companies that don't have 2 decades of profitability. And I'm almost pretty sure that the consistency of TSLY is not going to continue to persist the way it has been. Well, because it's easy for 2 to 3, 4 years. Okay, that's the easy part. Because you're spending investors' money. Because you have all these investors putting their money in and paying out the dividends to the other investors. It's kind of like one of those Ponzi scheme type scenarios. I'm not saying that it is. But when a company is first starting out, they use a lot of investor capital to get where they're going. Are they consistently profitable? Well, they're not even 3 years old. So that right there is going to be a no for me. And I'm pretty sure they don't pay out consistently. Well, they can't because they're only 3 years old. So there's no sense even continuing with that conversation. All right. Thoughts on Google lawsuit? No idea. Don't know. Don't care. I don't do Google. Google only has 2 years of dividends. So Google is a no. So not even any sense even looking at that one. Yeah, but you do not have to spend so much time on TGE strategy. Yeah, I got that. Thoughts on my portfolio: 60% SCHG, 30% VOO, and the rest in Google and BRK. I'm 18 and have some risk. Yeah, you do. Okay, number one, I don't do SCHD. Okay, my humble opinion. And VOO, hold on a second. Let's, wait a minute. My Yahoo Finance is not working properly. SCHD. All right. How do you feel about revaluation of gold? Revaluation of gold? Now, that's new to me. I haven't heard anything about the revaluation of gold. Okay, so this dude's 18 years old, and he has 60% of his money in SCHG. SCHD. Okay. Now, I'm assuming SCHD or SCHG. Is there such a thing as SCHG? There is. Imagine that. Okay, so user 41477375, whatever. Take a look at the numbers for SCHG. I don't like it because, number one, it's not 20 years old, number one. Number two, 0.45 yield. You're putting your money into something that's paying not even 0.5%. 1/2 for the year. Now, I'm talking about 1% per week, but yeah, you gotta put some effort into it. But if you're okay with, putting your money into something that gives you 0.5%, I'm pretty sure that 0.5%, what is it? What's that rule of 72? 144 years, you'll double your money. Think about it. 144 years, you'll double your money, because the rule of 72. You got your percentage and you divide it by 72, and that tells you how many years it takes to double your money. So SCHG at 0.45, it's going to take you 144 years. Wait a minute, 72. Yeah, 144 years to double your money with SCHG. VOO may be a little bit better. Let's take a look at that one. VOO. Oh, VOO is much better. 1.3%. Okay, so at 1.3%, maybe it's going to take you 70 or 68 years to double your money. Okay, look at the yield. That's what a rate of return you're getting. So how long is it going to take for you to double your money? With VOO, maybe 60, 70 years. But SCHG is going to take you 144 years. Okay? That's not my rule. They call that the rule of 72. Look it up. Okay, go online, say, how do you calculate rate of return, how long it takes to double? You don't tell you the rule of 72. Whatever your interest rate is, you divide it by 72, and that gives you how many years it's going to take you to double your money. Yeah, so I'm not impressed with either one of those. Let's keep on going. Oh, boy. Chip. Good evening, Chip. Tengrika. Should I keep my Victoria's Secret? That I could not tell you, young lady, because that's not something I look at. I want 20 years of profitability. Victoria's Secret's nowhere to be found there. I just read Intelligent Investor, and the stock is a no. All righty. Andrew, good evening. It's not SCHD, it's SCHG for your information. Yeah, that's what we're looking at. That was SCHG. Yeah. There are two. There's a whole bunch of them. SCHD and SCHG. They're all basically the exact same. So let's take a look. SCHG. Okay? SCHG, here it comes. Wall Street US Large Cap Growth ETF, SCHG. Yield, 0.45. Year-to-date total return, negative 14.91. Historical data. Well, let's see how often they increase their profitability. All right, history, here we go. Dividends only. Okay, let's see all the dividends. $2010. No. Only goes 2010. This thing's only 15 years old. Well, let's take a look at the numbers. Okay, 2010, not even a half a penny. Okay, 0.006, 0.007. Then it goes back down again to 0.006, 0.008, 0.01, 0.09. Okay. I'm not seeing why the hell you think this is good. 2 cents, 2 cents, 1.9 cents, 2.5 cents, 2.5 cents, 2.5 cents, 1.6 cents, 2.1, 2.1, 2.2, 2.6, 3, 2.7. It's like up, down, up, down, up, down. That's not profitable enough for me either. I have no idea what the hell you're thinking with this thing. Anyway, besides the point. Summary. It's $23 in the yield. It's $23 and the yield is 0.45. Okay, that's SCHG, as in good, great, grandiose. So let's look SCHD. Now SCHD is like dear, dad, doodle, Dudley, I don't know. But look at the numbers here. Okay, this one is better than the other one. 3.7. Well, I think 3.7 is better than 0.45. So you have your money in SCHG, good girl, Google goggles, you know. But this is SCHD, dad, day, delivery, you know, dedicated, you know. 3.72. It's like, were you even reading the numbers when you put your money into that thing? Think about it. This is the numbers. This tells you how the stock has, or the ETF has performed over the years. So you're putting your money in and getting 8 point, and you know what? Don't even, I'm just, no. Nope, and double no. What about NVIDIA? Oh my God, NVIDIA has a 1 penny dividend. 1 penny. No. Yeah, I get it. SCHG. I got it. Yet, okay. I have 100% SCHG in my Roth. Yeah, well, good. 140 years, you'll double your money. Prawley has been operating free also. I have no idea who Prawley is. Oscar. So the main focus is earnings growth every quarter. No. The focus is consistency of profitability. Okay? Consistency of profitability. Has the company been more profitable this year than last year? Have they been more profitable than the last 2 or 3 years? Has their profits increased every single year? Has their market share increased every single year? You got 100% of your money in VOO in your Roth. Well, all righty. I wish you luck with that one. I've seen enough Terminator movies, and I've seen enough of those science fiction movies where the computers take over and kill the humans. Yeah, I don't trust computers with my money. And don't give me that crap. It's an electronically traded fund. It's traded by a computer. Okay, you're giving your money to a computer to trade for you. And it's giving you 0.45. Not even 0.5% for the year. And you think it's good. Okay, hey, there's an ass for every saddle. Okay? It is what it is. All right. That being said, let's move on. I can't take that. High yield savings would be better than that. Absolutely. Andrew, a high yield savings account will give you 4%. But no, you have your money into something that's giving you 0.45. Okay? And then wait a minute, not VOO. What was the other one? SCHD is paying 3%. Yeah. Andrew, tell me you know nothing. Dividends don't mean anything. Oh my goodness. Wow, really? I'm not going to get into this conversation. A dividend is a portion of the profits the company gives back to the investors. Tell me you know nothing. Dividends don't mean everything. No, they mean whether or not a company is profitable. It's a measurement, okay? So let's say the dividend's $1. If next year it's less than $1, that means the company's not as profitable. If it's more than $1, it means they are. It's a lot easier to look at the dividend than it is to read through all the annual reports, all the quarterly reports. You can do it if you want. But if the profits the company makes gets broken down, you have two different companies. One will take the profits, put it back into the company for capital growth. Okay? Two, they take the profits and they hand it back to the investors in the form of a dividend. So if the dividend goes up, that means they're going to be consistently profitable because you can't increase the profits without increasing the dividends, which means the dividends cannot increase unless the profits increase. They go hand in hand. Okay? With the market down, you must be setting your strike price below cost. Absolutely, Lemonade. Andrew, how much they charge for that fund? Okay, I just bought 40 shares of NVIDIA. Is it risky? Well, wow, I don't know why people buy NVIDIA. NVDA. All right, let's take a look at NVIDIA. Okay, NVIDIA is now at $96. Well, a couple of months ago it was at $140. Why is it at 96? Interesting question. Okay, let's keep on going down. Okay. Earnings per share, $2.94 per share. That's the earnings. Look at the dividend rate. The dividend, 4 cents a year. You're paying $96 and you're collecting 4 cents a year. This is almost worse than that other company. This is 0.04. That's 0.04%. Now, 1% is 1%. 0.5% is 0.5. Well, 1/100th is 0.01. This is going 0.04. That's horrendous. Okay, but wait a second. It gets worse. It really does. Let's take a look at the statistics for NVIDIA. Okay. Revenue per share, $5. You write some of these numbers down or try to remember them, okay? NVIDIA, $5.31 revenue per share. How much money they have coming in as opposed to how many shares they have out? Well, the ratio is $5.31 per share revenue. That's what the revenue is. Well, let's slide down. What the hell? Right, so let's keep on going down. Book value per share, $3.24 per share. Now, do you understand what the book value is? If you take everything the corporation owns, everything, pencils, papers, staplers, okay, what do you call it? Copy machines, chairs, furniture, everything the company owns, and give a value to it, okay? Yard sale, okay? $3.24 a share. If The Supreme Court said you need to liquidate and pay off your investors. Guess what you're getting? You're getting $3.24 per share. That's what you're getting. Now, let's take a look at something else. A company that's been around for over 100 years, oftentimes overlooked. General Motors. It's at $44 a share. Well, look at the revenue per share. How much money they have coming in per share? $168 per share. Okay, that's huge as compared to that other piece of crap. Book value, $63. Well, hold on a second. If the stock price is $44 and revenue per share is 168, that's a hell of a lot better than NVIDIA. But take a look at the book value. If you have to liquidate General Motors, okay, and you're paying $44 a share, and if they have to liquidate, well, you're walking away with $63 per share. It's a hell of a lot more valuable than NVIDIA. But take a look at the dividend and the yield on General Motors. Okay, the dividend is 48, which is, let me think, 48 by 4, that's 12 times. 12 times the amount of revenue or dividend on General Motors as opposed to NVIDIA. Well, look at this, 1.8%, 1.08%. Well, that is more than 10 times what the revenue is and what the dividend is on NVIDIA. Okay, so why would you want NVIDIA rather than General Motors? General Motors has been around for 100 years. They ain't going anywhere. NVIDIA, what are they, 10, 15, 20 years old, if you're lucky? Yeah. You guys get your money in the wrong places, asking the wrong questions. You're looking at that shiny object. Yeah, it may be a shiny object and look great, but where is the historical value? In 20, 30, 40 years from now, what is that going to be like? Well, General Motors is probably going to be very similar to where it is now because they've been here for over 100 years. Anyway, I don't understand your younger generation. Let's keep on going. Good evening. Hope all is well. Thank you, Miss Lisa. Thank you, Sensei. Never mind. Don't look at NWL. It looks bad. All right. Why does Apple move double digits with the amount of liquid cash? Luke, you're going to get stuck with NVIDIA. That's going to be a hold. No, I don't do NVIDIA. Plain and simple. The numbers are absolutely horrible in my opinion. Okay, they might be the hottest thing since sliced bread. Great, fine, dandy. Okay? There's always one company that does it, shoots up like a rocket, and then all of a sudden everybody's left holding the bag saying, what the hell? Look at the damn numbers. The numbers are atrocious for NVIDIA. What the hell were you thinking? Absolutely. Ooh. Joshua, NVIDIA needs that money for research and development, not dividends. Yeah, I understand that. So why would I be looking at NVIDIA if I'm looking for cash flow? Okay, I'm looking for cash flow. I really don't care about NVIDIA. Abbott Labs, I like Abbott Labs. They've been around for quite a while. Different industries, yeah, I get that. Ultra Zombie, it's important for people to realize if they are dividend investors or growth investors. Ultra Zombie, I'm going to agree with you 100%. Now, I'm looking for cash flow. I'm not looking for growth at all. Uh-oh. No matter, buy second wave done, third wave likely in progress. Okay, thank you for this information. You're welcome. I have 1 share of NVIDIA. I have 0. You're new feminine. Brilliant. Okay. I have 5 shares in NVIDIA. First time buying stock. Okay. Just got this number 3. Okay, cool. What about Tesla? Same thing. No dividends. No thank you. Okay, I'm strictly a dividend investor kind of guy because I'm 61. I am retired, which means my income has to come from somewhere. Gail, good evening, and how are you today? So my income has to come from somewhere. Now, I could go back to work, but I have no desire to do that. Forrest, how you doing today? Oil companies, me like Occidental Petroleum, ConocoPhillips, ExxonMobil, Phillips 66. I mean, those thingies? Yeah, why do those? I like those. All right, let's get out of here. Let's go back to where we were, consolidated freight. So consolidated freight looks good. It is moving up from the bottom here. But again, ask yourself the question, is this something you want to hold on to? Well, let's see what it looks like. Lisa, I am stuck with a little bit of NVIDIA. However, I'm slowly getting rid of it as it goes back up and down, trying to get rid of it as I can make a small profit, but I don't want it any longer. Oh, cool beans. I'm going to agree with you. All right. Lockheed Martin. Ooh, that's a good one. So Tesla's a no. Lockheed Martin, LMT. LMT. Hold on. I'm going to write LMT down. We'll take a look at it later. LMT, Lockheed Martin. Okay, we're still looking at CF. All right, so let's take a look at the 75s. Let's do a covered call scenario with CF, Consolidated Freight. Okay, so let's get rid of this. Okay, let's change this to covered stock. Because when I say I'm looking for a simple, safe, predictable strategy, I don't want to sit in front of my computer all day. Okay? I want to get in. I want to take a look. It's kind of like gardening. All right? You go out on a Saturday morning, you spend an hour or so with your gardening. And then throughout the week, you spend 10 or 15 minutes. Just, walk through the garden, take out the weeds, and just water it. That's it. Well, this is my financial garden. That's a weird way of looking at it. But yeah, I want to take a look at my money every day. I wake up, I take a look at it. Okay, what did I do on Monday? Where is it now? Am I at risk of losing? Oh, fine. It takes me 5 or 10 minutes to do that every day. Now, Macy's. Oh, the dividend is non-existent as far as I'm concerned. All right, Luke. Yeah, I bought NVIDIA quarter of a while back when it was first starting off, buying and selling stock, blah, blah, blah. My first mistake. Okay, fine. Scott wants to take a look at Coca-Cola. Ooh, Southern. So KO, Coca-Cola, and Southern. We'll take a look at that one also. All right, so hold tight on that one. Charlo, ¿qué pasa? Ernie, how are you doing, Ernie? Thank you. Todd Vegas, what's happening? Ooh, Skull Trader wants to take a look at Cardinal Health. CAH. MLGO. All right, aquaponics stat. I'm going to say no to that one right off the bat. Thoughts on Reddit? Reddit is not profitable at all. Big fat no. AI stocks have not been around for 20 years. Automatic no right there. Luke, if the dividend starts with a 0, there's got to be a reason to buy. I'm not quite sure what you mean by that, Luke, but okay. What's my other TikTok? That would be the 10-Minute Trader. Okay, you've heard my show. I mean, you've heard my videos. Hey, this is James from Dividend Stock Talk. Okay, that's TikTok channel number 1, Dividend Stock Talk. Brought to you by the 10-Minute Trader. Every single video I do, brought to you by the 10-Minute Trader. Because the 10-Minute Trader is my original company, which if you do the research on it, you see it's over 20 years old. And I have videos going back almost 15 years with that company. Okay, so let's look at the 75s and see if that makes sense. We're still looking at Consolidated Freight or CF Company. The 75s right here, okay, buying just one contract and at the market, Now, I've said why I like market orders opposed to limit orders many times back. So let's check it out. By one covered call, CF, consolidated freight, 100, that's the weeklies, 25 April 25. Well, that means this order or this option is going to expire on this coming Friday, the 25th. So whoever buys this has got to get off the pot and actually do something. Either you're going to exercise it or you're going to do something with it, or it's going to expire by the 25th, which is 3:59 p.m. on Friday afternoon. Because at 4 o'clock, the clock stopped ticking. All right, so the $75 call option against the stock at the market. So it's a two-order order. It's a they call it two-leg order. So I'm buying the stock, that's number one, and then I'm selling the option, that's number two. Okay, my profit right here, maximum profit, 127 bucks. Cost of the trade, including commissions and fees, 7,373. It's not like you're buying something, it's an investment. Okay, so you're buying 100 shares, great. You own that 100 shares. You own that 100 shares at this current price, 75.13. Let's check out the rate of return. To do that, we need the calculator and do a little simple math. Simple math. The profit, 127, 127. I want to divide that by the cost of the trade, including commissions and fees, 73.73. Gives me a grand total of 1.7%. Now remember, I'm looking for 1% per week. Now we have 4 days left, so this is not that bad of a trade if I like consolidated freight. Well, 1.7% every week. What does that come to at the end of the year? There's 52 weeks in a year. That's almost 90% per year. I could live off 90%, okay? 1% is 50. 1% a week is over 50% per year, okay? 1.7% every week is 90% per year. Well, that works for me too. Let's get out of there. Get out of there. Get out of there. Get out of here. Get out of here. And we're back to where we start again. So that's if you like consolidated freight. 1.7. All right, I'll write that one down. All right, next on the list. Oh, missed some questions here. Gotta go back a little bit. Lisa, do I like Colgate? Colgate Palmolive, oh, that's a good one. Wow, I got all these questions I missed. Holy cow. All right, CAH. Let's do CAH really quick. John Herhusky. How you doing, John? Scott. What's the other TikTok? Already did that one. He wants to look at Cardinal Health. CAH. That's a good company. Cardinal Health. We're going to say no, only because look at your bottom here, your tops here. Profit taking started already today. Okay, look at your last 30 days. Okay, up 30-day high, profit taking brings us down to here, accumulation here. You missed the opportunity. The opportunity was last week or the week before last. The profit taking has already started, so no to Cardinal Health for this week. KG, what's happening? You can follow back and start interacting with them. Oh, cool beans. Bill, Liquid Metal Technologies. Interesting. Bill, you actually got to give me the ticker symbol. I'm in FCX right now. How's that looking? FCX. FCX. Freeport McNamara. Interesting. Okay. The last couple of months, here's your high, here's your low. She went up, now she's pulling back. This looks like it might be okay in a couple of weeks once it finds a new bottom. Because stocks come down, then they go up, and then they come down, then they go up. Well, after they go up, they come back down again. So this thing's on its way down. So FCX, not this week, maybe in a couple of weeks. I'm looking at 2 weeks for FCX. FCX. All right. Next. Skip, how you doing? Brad, how you doing? Jacob, what's going on? Bill, Stan Moore is my friend. All righty then. All right, Mr. Bill, Mr. Stan, how you guys doing? Top Dat Baby wants to look at Hormel. For those you do not know, Hormel, which is famous for its chili, is a dividend king, which means they've been profitable for more than 5 decades. Now, to become a dividend king, you have to increase your profitability for 50 years or more. That's 5 decades. Well, that should be an absolute, yeah, I'm interested in that one. Well, let's take a look. Here's the high, here's the low, here's where it was, here's where it is. Look at the motion. Up, down, up, down, up. Well, right now we're at 30 bucks. The 30 is going for 60 cents. The 32 is going for, yeah, not that great. Gene, I'm a big fan of trading. However, once they started the 24-hour trading, because there are some stocks that trade 24 hours, these numbers here, okay, well, that's what it's currently trading at, the after-hours market. But all these numbers here are for 9:30 to 4. So these numbers don't change, but these numbers do, so it kind of messes up with the calculations. But when the market's open, these numbers and these numbers correlate, they go together, and it makes it easier to figure things out. So Lisa wants to take a look at Colgate-Palmolive. Okay, so Hormel, let's jump in here. Interesting. Okay. Up, down, up. Now she's coming back down again. So much for Hormel. Sorry, dude. CL, Colgate-Palmolive. Interesting. Look what happened right over here. Okay. There's a bottom, 86, 96. That's 10 bucks. That's a 12% increase from here to here. They got profit taking started today, which means this baby's going to come back down again. Sorry, Lisa. Jacob, G-Wave. What the heck is G-Wave? Market looks okay to buy now. Okay. Not just chill. Okay. Jacob wants to look at G-Wave. What the heck is G-Wave? G-W-A-V. Oh, hell no. What the hell are you thinking, Jacob? Ron, COST, Costco, out of my price range, dude. You think I got $1,000 a share to pay for a stock? Hell no. And, oh, look at this. And she dropped today. Yeah. And here's the bottom. Shoots up to 1,000 bucks. Now you get profit taken. Now this baby's coming down. I don't do Costco. Way out of my price range. I like to stay under $250 per share. Scott wants to take a look at Coca-Cola. Ooh. Same thing with Coca-Cola. Look. Okay. Profit taking started today. Look at that run. From 66 to 70, 73 and a half. Yeah, she's coming back down now. Garrett, working a double, but still able to tune in during break. Wait for Oracle to hit 150, 115. ORCL, Oracle. Oh, yuck. Yeah, Oracle's dropping. The highs here at 156. Now we're at 122 and dropping. So yeah, it looks like this week or next week it might find that bottom. So I'm going to put Oracle down for next week. ORCL. Hold on just in case of a loss. AB, how are you doing today? MindMed, happy little painting company. MindMed. You got to give me a ticker symbol, dude, because I have no idea what that means. All right, Scott wants to look at GSK. GSK. Interesting. Look at that. High, low. Where was it? Where is it? Look at the motion. Up, down, up, down, up, down, up. It's going up right now, so that's a good sign. Well, let's zoom in a little tighter before we do. Check the numbers. Is it going to be worth our while? 36.50 is 40 cents a share, 40 to 85. Well, that's over 1%. That works. That's a yes. Well, let's take a deeper dive into this. A year ago, GlaxoSmithKline was at 40, jumps on up for the high at 44.590, MNND. All right, happy little painter, give me a minute. I'll take a look at that in a bit. Okay, here's the high of the year. That was in the middle of May last year. The bottom was in the middle of January, 31. So this thing goes from 46 to 31. Not a big drop. What is that, 12 bucks? 12 bucks on a $46 stock, that's about 25%. So it's a 25% drop from the high to the low. Oh, that's not much at all. We got some companies that dropped 60 to 70% since their high. All right, so the last 90 days, which is the last 3 months, high, low is look at the motion, up, down, up again. That's easy to see. Simple. Just broad strokes. I don't have to zoom in and look at all this detail. I just want a rough idea. 90 days ago, we're here, shoots up, pulls back, now it's going back up again. That's easy to see. Now it's the 30-day chart I want to take a closer look at, because the 30 days gives me a better idea of where do I think it's going by the end of the week. Well, that's this Friday. That's 4 days away. Okay, the high is 30 days ago, 39.50. 32 is right here. Now she's jumped up. She went from 32.50 to 36.50. So that's $4. So $4, that's 12%. That's a 12% increase here. Could it keep going up? Yes, it could. Is it going to? Don't know. Let's take a quick look. We're going to take a quick look at what's called the seasonality chart. Now, a seasonality chart is basically exactly what it sounds like. It's a chart that gives us a look at the seasons. Winter, spring, summer, fall, or the whole year. Now, for those who don't know what a seasonality chart is, all the way off to the left is January 1st, all the way to the right is December 31st. So we're looking at the whole year. Well, how does the stock react throughout the whole year? Well, the blue line is this year. The red line is 10 years worth of information. So that's the average movement of the last 10 years. Now, I can set it for whatever I want, 1 year, 3 year, 5 year, 7 year, 10 year, 20 years. Now, I think 20 years is too much information, and I think 5 years is not quite enough. So I settle for 10. This is the 10-year average movement. Here's where we are right now, that blue dot, that's today. So what is it doing most likely in the next couple of weeks? Well, right there, she goes sideways for a little bit, for a couple of weeks, and then she's going to go up. So 1 week, and then she's going to shoot up. That's historical performance. That's not guaranteed. There's only 3 guarantees in life. You guys already know 2 of them. I'm going to enlighten you and let you know what the 3rd guarantee is. Okay? Death, taxes, and disappointment. Death, taxes, and disappointment. Your 3 guarantees in life. Okay, so let's get out of here. Back to where we were, right there. So you can argue all you want, but it is in an upward trend. Here's the bottom. Now she's going up. Great. What does it look like? 36.50. Well, let's take a gander. Okay, covered call. 36.50. There it is right there. Okay, just one contract. Now, this just gives you a rough idea. Now, the numbers in the morning will all change, so you'll have to do this all over again. But basically, this is how it looks. By one covered call, GSK 100s, that's the weeklies. 25 April, that's this coming Friday. The 36.50 call option against the stock at the market to open. Okay, now you may not know it, but this screen here behind me is being recorded live on YouTube. So if there's something in here that you think that you might want to re-watch or ask questions about, just go back in and take a look. Okay, they're recorded. There's over 900 videos on YouTube. Just take a look at tonight's video, watch it over again, and see if you missed something. Also, with this being live broadcast on YouTube, if you're on your phone or an iPad, you probably can't see these tiny little numbers. Maximum profit, 67. Cost of trade, including commissions and fees, 3,500. Well, let's take a look at that. What does that sound like? 67. 50 is the profit. You take the profit and you divide it by your investment. That gives you your rate of return. Is that rate of return more than 1%? 3583, 1.8%. Well, 1.8% is going to be over 100%. So I'm going to write that one down. Which one is this? GSK. GSK, and that is 1.8. 1.8. Well, that's not that bad if you think about it. Okay, build trail. The graph below shows the elevation profile of the trail. Use the graph to answer the following. Just wait even for a few months. Okay, AB. All right, let's keep on keeping on. Ooh, Devinator wants to take a look at Kimberly Clark. Wait a second. Somebody wanted to look at Oracle and then Colgate-Palmolive. Let's do those first. I like Oracle and I like Colgate-Palmolive. I like Colgate-Palmolive more than I like Oracle because it's been around a lot longer. Colgate-Palmolive, just in case you were curious, is a dividend king, which means they've consistently been increasing their profits for more than 5 decades. They've been in business for over 100 years. They've seen a lot of crap in the last 100 years, yet they are still in business. And yes, they are still increasing their profits. So why not look at Colgate-Palmolive? All right, well, let's take a look. High, low, was, is. Look at the motion. Up, down, up, down, up. 95.79, which would be the 96 is going for 130. That's more than 1%. It's actually that simple. Now, you guys may not know this, but the strategy I'm teaching you right here was created for my 9-year-old daughter. Let me just go back. No, that ain't it. That ain't it. There it is right here, 10-minute trader. Okay, that's all my website with all my social media. You guys know how to use that. YouTube, right there for those guys curious what the YouTube channel is. It's The 10-Minute Trader. All right, see, The 10-Minute Trader. There you go. Now, let's go to videos. The oldest videos I have go all the way back to 2011, I believe. And here's the princess right here.
Hi, I'm Gracie, and me as you being part of my internet website called Thingy, which my dad doesn't like me calling it that, but I do. Being part of that, we're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of
86
stocks
is in the house.
that'll help you get the best return on life.
That's me, long time ago.
21 days in the month of March. What does that mean? That means every single day you buy a different stock. Every single day there's a different company paying out dividends. Seriously.
I laugh every time I see that thing. Okay, so 15 years ago, okay, when my daughter was 9, she said, "Daddy, what are you doing? Can you teach me?" All right, so how do you teach a 9-year-old how to invest in the stock market when most adults can't figure it out? It had to be simple. It had to be safe. It had to be predictable, consistent, and no way for her to lose. So I came up with 5 rules. Rule number 1, never buy something you don't want to hold on to for the rest of your life. If you don't understand it, if you don't want to buy it and hold it to the day you die, don't buy it. This is your hard-earned money you're investing. You're investing your money. You're trading your time 40, 50, 60 hours a week for a little bit of money. And then you're going to take that and then you're going to invest it. So hopefully when you retire, you'll be able to live a nice, comfortable life. Now, my life is very comfortable. I like it. It's simple. It's easy. I don't have very much drama in my life. My kids are all on their own. They don't ask me for money all the time, which is great. My grandson, they only have one at the moment. Okay, he's not that taxing on me. So yeah, you will all eventually retire and you will need to figure out where your money's going to come from. If you're not here yet, fine, great. But if you are here, you need to make sure your money is safe. You need to make sure your money is consistently bringing you in something. So you have 2 choices and only 2. Learn to do it yourself or pass that responsibility on to someone else. A lot of people do it. A lot of people give their money to an ETF and let the ETF pay them 0.5% or 3% per year, 5% per year. Yeah, do it yourself, get 1% a week. That's over 50% per year. That way you can retire a hell of a lot quicker. However much money you think you need, well, this is a whole new approach. Is it simple? Yes, it's simple. Is it safe? Yes, because you're only buying good companies that you like. Scott wants to take a look at Wynn. Oh my goodness. I actually lost money on Wynn Resorts last year. It was one of my losers last year, WYNN. Yeah, she dropped and I just couldn't catch it far enough and just... All right, let's get out of here. We don't need to see that anymore. Bill wants to take a look at IFRX. Now, Bill, I feel a little bit bad about that because I've never heard of that before. IFRX. Yeah, hell no. Bill, what are you thinking? KMB, Kimberly Clark. I love Kimberly Clark. Again, another company's been around for a while. It only takes a couple of seconds to look and see this is a no for this week, only because here's your last 30 days. Look at the movement. Down, up, down, up. Now she's coming back down again. Okay, stocks go up until they're done. Once they're done going up, what do you think they're going to do next? They're going to come down. And then once they reach their bottom, what do they do next? They turn around and go back up again. That's all they do. They go up, they go down. If you're expecting a stock to come over to your house and wash the dishes, take the dog out for a walk, dump the trash, and make the bed, yeah, no. They don't do that. They go up, they go down, and that's it. That's it, and that's all. QUBT. What the hell is QUBT? QUBT. That's a hell no. Okay, so the reason why this is a hell no is like a year ago, it's at $1. If it's at $1 a year ago, there's almost no way this thing has 2 decades, 20 years of increased profitability. Yeah, no. No, no, hell no. Coney melatonin. Seriously, you want to look at Coney? Hollywood's in the house. Michael. Technical versus fundamental. Which would you choose? Fundamental, of course. It's a great argument in both directions. But I kind of use both of them because number one, I don't look at a stock unless it has good fundamentals. That means they're consistently profitable. They've been in business for a while. I mean, a while meaning 20 years or more. Okay, they have good cash flow. Those are fundamentals. But once you get to the fundamentals, now you get a big chunk of stocks. Okay, now we look every single week, today being Monday. We should probably look again. But I look every single week and I see how many different companies are there out there that I can invest in. Well, last week it was 10,036. That's a lot to go through, 10,036 different companies. But what I'm looking for specifically consistency of profitability, at least 2 decades of profits, and weekly options. So out of all that 10,036 companies, only about 300 make my list. So that's the fundamentals I'm looking for. Great. Now I have 300 companies that are in the fundamentals thing. So let's get rid of the fundamentals and let's look at, what was he calling it again? Price action, I think they call it. Once you get away from the fundamentals, once you decide which companies you like, great. When is the right time to buy? Well, to find out when the right time to buy is, you got to look at the chart. Where's the high? Where's the low? Where is the flow going? Where are we looking to put our money? Now, it's not just me. You say, I'm here. Now, if I take a look at all my accounts and figure out how many people actually come through and watch me, hi, that is about anywhere between 5,000 and 30,000 people every single night come in to say hi. Oh, hi, hello, and see what I'm doing. Well, out of all those people, they're all looking for basically the same thing. They want to make some kind of return on their money. Now, a lot of them are unrealistic. They want to buy something and have it shoot to the moon the very next day so they can retire to Tahiti or Fiji or somewhere like that and live a comfortable lifestyle. It doesn't really work that way. I mean, it does once in a while. I mean, go to Vegas, somebody wins once in a while just to encourage everybody else. Hey, it's possible. Yeah. So anyway, that being said, I look at certain criteria. So Melatonin wants to take a look at Coney. Windfall investing advice, EX 500 grand. User 704156. But it would have been easier if your parents named you Tom. So I'm going to call you Tom. I want a robot to do my dishes and laundry. They're actually getting to that, Lisa. Okay? So, robots are doing a lot of weird, kinky stuff. Let's keep on moving. Now, Melatonin wants to take a look at Coney. Even though Coney's not on my list, and the reason being, Melatonin, why Coney is not on my list, 16 May, 20 June, 18 July, 17 October, that's a monthly optionable stock, which means I can only do a trade once a month. Well, doing a trade once a month, yeah, it's a great time saver, but what am I making? 12 to 24% a year? That may be great for some of you, but it doesn't work for me. I want 1% a week, which is 50% per year. Because even at 1% per, or 1 or 2% a month, or 24% a year, I'd have to go back to work. Because that's not enough to have me living in the lap of luxury that I'm getting accustomed to. Okay, Scott wants to take a look at Wynn, W-Y-N-N. W-Y-N-N, Wynn Resorts. Okay, high, low, is, look at this, down, up, down, up. Okay, great motion. Okay, the high of the year looks like 106, the low of the year 65, almost a 50% drop, almost. Let's take a closer look. Wait a second, before we do that, at 74.96, let's call it 75, the 75 is going for 161, which is over 2%. Well, 2% a week, 2% a week is over 100% per year. Okay, now you might want to pay attention to this one. Dude over here who has all his money in those companies giving him 3% a year or 0.5% a year. Wynn Resorts, a covered call getting 2% a week. 2% a week every single week is over 100% per year, which means you could double your money every year. Now that SCHG that you have your money in that's giving you 0.45% per year, that's 44 years to double your money at 0.5% a year. That's a long time, dude. But a covered call, 2% a week, you can double your money in 1 year. Okay, numbers don't lie. Okay, so KMB, we looked at that one. When we looked at that, so let's take a closer look. A year ago, we're at 96.76. The high of the year, 107.91. Let's call it 108. last 90 days. Lisa, I don't think having a robot washing my dishes and doing my laundry is kinky. No, Lisa, it reminded me of a conversation I was having with someone else on some of the interesting things they're creating robots to do nowadays. So yeah, doing the dishes and the laundry, okay, that's one thing. But if you look up all the weird stuff people are having robots do, yeah, some of it's kind of kinky. Some women get turned on by a robot doing the dishes. I don't know. Little Masterpiece, just signing in. How are you today? All right. This is the 90-day chart. Basically, is simple to look at, and you can actually see the pattern. Down, up, down, up. Well, that's pretty simple. Look at the motion. It's on its way up, which means it has a long way to go before it challenges that 90-day high. Can it get there? Don't know. Don't really care because I'm looking for the 30-day. I don't want to be on record saying I want to buy something and hold on to it for a long period of time. No, I want to jump in, get my profit, jump out. Okay, well, I'm going to show you something in a couple seconds. Hold that thought. Last 30 days. Here we go for the last 30 days. Down, up. Well, down, up, down, up. It's pretty simple to see, right? Two gaps. This one already filled. This one's going to fill next, which means the stock's going to come up over this number here, 82, 84, somewhere in that area. But yeah, here's the bottom. Yes, it's going up. So great. What does it look like? Well, what does Wynn Resort normally do? Well, for that, we're going to look at the seasonality chart. And that gives us an idea of what this thing does every single year over the last 10 years. Okay. So you're going to dip a little bit, then go back up, and then dip a little bit more. Okay, now this is just historical performance, what it normally does. Does that mean it's going to do it again? No, it doesn't mean that at all. It just means that's what it looks like. Okay, business as usual. And we all know we're not in a business as usual type scenario. Okay, so 75, what does that look like? Well, let's do one. Covered stock at 75, there it is. One contract at the market to open. Here it is. Buy one covered call of Win 100, that's the weekly, 25 April, meaning the option expires this coming Friday. $75 call option against the Win stock at the market to open to open. 2 trades, remember. Buy the stock, sell the option, that's a covered call. Now, after the option expires on this coming Friday, you will still own the stock if it doesn't hit your target. What's the target? Target 75. Well, what's it at now? 75.67. Well, in the morning, all the numbers will change, so just give you an idea of what it could be. The profit's 177. It's going to cost 7,300. Okay, 177 divide 7,300. Grand total of 2.4. Oh, I like that one. 2.4%. I'm going to write that one down. 2.4. That's the best one we found so far tonight. Wynn Resorts. Not that I'm saying that's something you should buy. I'm just saying, if you like it, take a closer look. Does it make sense? Is it a company you're okay with owning? Is it a company you want to buy and hold on to? So let's keep on keeping on. All right. Rockio, good evening. Windfall investing advice. Okay, you got to give me more to go on than that, dude. Ben Somerville, how are you doing? Ferris, how are you doing? Jay Horwitz, good evening, good evening. Cashflow Kings, Mando, how are you doing? Mando, you have an option on max funded IULs. Ooh, okay, great. Cashflow King. Now, we had a conversation before. Not an actual conversation I wanted to have, but you did sign in. You did give me a couple ideas, and I did ask you. I would like to chat with you about IULs and get your knowledge on a VUL. Okay, specifically for you, Mr. Cashflow King. Keep on going. Crown Art Custom, good evening. Quantum Antenna, thank you for that. Let's go, Brandon. All righty then. Cody, good evening. Ferris, PM, Philip Morris. Please discuss your membership options. Is it in the Patreon? Yes, John, it's in the Patreon. John, I always ask people, if you really want to join, your best bet, just drop me your phone number. I'll give you a call. We can chat. It's not right for everyone. Okay? Seriously. Right? I take people under my, I mentor them to help them get their 1% per week. Now, everybody doesn't trade the exact same way I do. Everybody's different. But does it make sense? Now, John, I try not to sell anything while I'm here. Now, I'm one of those few people online. Well, I'll sit and talk to you for hours, and I won't try to sell you anything. Now, do I have stuff to sell? Yeah, I do. It's in my bio. Well, we all adults here, we know how to do it. You go to my bio, you look up the information on me. What do I have to sell? I have books. I blah blah. I'm not trying to sell anything. Okay. All right. So Ferris wants to take a look at PM Philip Morris. Let's take a look at Philip Morris. Philip Morris. Hell no. Okay, I don't buy at the high of the year, which was yesterday or last Thursday. Okay, here we are right here. Today it pulling back. So yeah, no, sorry. Don Paulus, how are you today? Mr. Pibb, what software is this? Mr. Pibb, this is Think or Swim, offered by Charles Schwab. It's just a trading platform. Bill, man, do you have an opinion on max-funded IULs? Yes, I do, Bill. Mr. Pibb, Yahoo Finance. Okay. Quinn, thank you. Uh-oh. Saint Gucci wants to take a look at JEPQ. No. JEPI, double no. ISPY, triple no. You got a triple one there, dude. Jimmy wants to look at Coca-Cola. KO. Yeah, no. What do you think? Look at this last 30 days. Up, down, up. Yeah, today's a down day. Okay, look at that profit right there. Yeah, now it's time for profit taking on Coca-Cola. You missed that boat, dude. But hold on. Give it about 2 or 3 weeks. I'd say about 2 weeks, and it'll be time to jump back into Coca-Cola. Because when it goes from 66 to 73, people are going to take profits. When they take profits, that stock's going to drop back down again. When it does, it will do this thing right here. It'll come to a bottom, it'll turn around and go back up again. So give it a week or two. It'll come down and then go back up again. I'll write Coca-Cola in 2 weeks. So 2 weeks from today, we'll take a look at it again. All righty, David, thank you for that. Justin, thank you, Justin. JC, BBDC can double your money in 8 years. Okay, now, JC 90922, you must be in California. BDC can double your money in 8 years. Okay, so currently, I don't know how to put it to you this way. Currently, I make over 50% per year, which doubles my money every 16 to 18 months. Okay, so in 8 years, when you double your money, I will probably quadruple mine. Just saying. Ooh, Andrea, thoughts on Alcoa? Ooh, nice one. Alcoa. And here we go. The high, the low, where was it? Where is it? Look at the motion. Up, down, down. What's going on here? Okay. Now, I do have some Alcoa, just be up front with everyone. What is the most reliable trading indicator, sir? The most reliable indicator, I would say consistency of profitability. Oh, Lisa wants to take a look at Campbell Soup. Okay, we'll take a look at Campbell Soup in a little bit. Second wave down is down. Okay, Sam, not quite sure what you mean by that. Has a big spike today. Which one are we talking about? Alcoa. All right, we're going to take a look at Alcoa in a second, okay? We're currently at 23.30, so the 23.50 is going for 54. That's over 2%. That works. What's going on here? Well, let's take a look at that. What's going on right there? Okay, that's today. What's happening here? That's what I want to see. All right, a year ago, we're at 36.28. Okay, we shoot up, we pull back, we shoot up, we pull back. The high of the year, the end of November, was close to 48. Okay, last 90 days, that's the last 3 months. High, low, is, look at the motion. Down, up, down, up, down, up, down. So unfortunately, that's going to be a no. Look at, we get a little closer to it. Okay, here's the high, here's the low. She went up, she pulled back. Now, next week, yeah. This week, no. So Alcoa for next week. Okay, Alcoa for next week. Okay, BBDC. Okay, let's check out BBDC. BBDC. Hell no. That was quick, wasn't it? I don't do monthlies because they just don't pay. Sorry. 16 May, 20 June, 19 September, 19 December. You can only trade a monthly optionable stock once a month. That doesn't work for me. Doesn't work for me. Sorry. So, JC, you may like getting 10% a year. Okay? I like 50% a year. Okay? 50%, 10%. I don't know. You choose. Has a big spike today. Yep, saw that one. Second wave. Blah, blah, blah. Okay. Let's keep on keeping on. Right there. Nirvana, 31. If we don't target the dividends and only the weekly option strikes count, why do dividends matter? Ooh, that is the best question today. Now, Nirvana, 31. I have 8 channels going. 1, 2, 3, 4, 5, 6, 7, 8. That is the best question all night long. Now, Armando, dude, I tried calling you tonight. You left me your number. I called, went right to voicemail. I say, if you want to chat, leave me a number. I'll give you a call. I called you, went to voicemail. When do you cut a loss? I don't cut losses. Okay, see, we are in week number 17. Hold on, I was going to show you guys something. Let me show you real quickly. Go here. Right here. Oh, wait, here it is right here. Oh, sorry, that's 2024. You don't want to see that. 2025 trades, here we go. Weekly trades for 2025. Right here, see that? Weekly trades 2025. Here's every single trade I made. Now, I have 7 accounts, 7. I share 3 of them publicly, so you guys can see exactly what I'm doing. Okay, there's the other accounts. Yeah, no, I got to draw the line somewhere. So I'm sharing 3 accounts all the way back to January 1st. Every single trade I do, just click on it. They're right there. Okay, timestamp here. Tells you what time of day I did it, what the trade was, buy, sell, those kind of things. How many, who it was, what's the date, what's the strike prices, what was the price, what was the profit, blah, 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 all that kind of nasty stuff. So, that being said, a quick little count. Look, all those, that's just 1 week. And all those, that's just 2 weeks, 3 weeks, 13. Wait, what week are we on now? We are on week number 16. Yeah, because week number 17 I haven't done yet. So here's week 16. 16 weeks. This is an idea how many trades I do every single week. Okay, as of this year, okay, I have 2 losses. That's it, 2 losses in over a couple of hundred trades this year. That's it. Simple, safe, predictable, consistent. That's what I'm looking for. Simple, safe, predictable, and consistent. I'm not looking to hit a home run. I'm looking to get 1% every week. Well, most of these trades do give me 1% a week. Oh, I didn't finish this one. 1.76 in this account. Look at this one, 3.9% last week. $8,700, $8,100 just on that one count. Yeah, that's crazy. So yeah, you can take a look. Okay, these are every single one of my trades I did this year. And that's a lot, and I only have 2 losses this year out of these 3 accounts. Wait a minute, 1 loss out of these 3 accounts. The other loss is in my Robinhood. All right, so let's get out of that. Don't need to see that anymore. Okay, so BBDC is going to be a no. Sorry. It's 11 o'clock. We're going to quit at 11:15. Now we're just going to answer questions. We got a bunch of questions here I'm going to need to answer. Reginald Murray, how are you today? Tengrika, cool beans. Bert Peterson, what's happening? Ooh. Scott wants to take a look at Capital One Finance. That's a great company. Oh, wait a second. Why even have it? More costly to administer that than it's worth. All right, JC, I want to hit that question because I'm still going to answer Nirvana's question. JC, what was your other question? Okay, BBDC pays over 10%. Okay, that was the last thing you said. And then you said, why even have it? More costly to minister than it's worth. I'm totally lost, JC. I am. All right, so anyway, Nirvana, why don't target, wait a minute, if we don't target dividends, why are weekly option strike counts? Why do dividends matter? Well, let's go here. Let's get out of there. And we're going to concentrate on this again for a little bit, just for Mr. Nirvana. Now, Mr. Nirvana, the reason why I like dividend stock companies, number 1, okay? You have 2 different types of companies. One shares their profits with their investors through a dividend, which means they take portion of their profits and give it back to us, the investors. Well, I like that. I'm retired, so I need cash flow, so that's important. The second company takes all their profits, puts it back into the company for capital growth. All right, fine. So we got a distinction between the 2. Now, we already know there's over 10,000 different companies to invest in. Okay, fine. Half of them pay dividends. The other half do not. So right off the bat, 5,000 companies I don't even want to look at. Now, why are dividends important? Well, besides the fact that they're sharing their profits, okay, the reason why dividends are important, are you ready? Do you see this behind me? This is called an EX dividend calendar. Basically looks like any other calendar, okay? April 2025, we're in the 21st right here. This is today. Now, you see these little green dots. ITW, in Illinois Toolworks. FRT, which is Fortis. ABM, Able Model. Cisco. Colgate Palmolive. Lowe's. Northwest National. Fullerton. Procter & Gamble. Hormel. AbbVie. Abbott Labs. These companies on here have consistently increased their dividend payments to their shareholders for more than 50 consecutive years. That's what it says, 50 years of dividend increases. That's these right here. Now I can change it to companies that have 25 years. Whoops. 25 years of increased dividends. Oh, now we have Caterpillar, Clorox, West, General Dynamics, Cardinal Health, Nucor, McKesson. Okay, now the reason why I like dividend stocks, here we go. This is the big one. Now, a lot of people understand this. A lot of people say, ooh, that makes sense. Caterpillar and Procter & Gamble paid out their dividends today. Well, that's the EX date, the last day the stock trades before the dividends paid out. There are 4 dates to remember when it comes to a dividend stock. Date number 1, dividend announcement date. Okay, that's the day the company comes out and say, hey, hello everybody, this is so-and-so from such and such company. This is how much money we made this year. This is the dividend you are going to get. Your portion of our profits. We did a great job. Yay! Okay, that's the announcement date. Date number 2, EX dividend date. That is the date that they put on the calendar. It says, if you want to collect our dividend, you have to buy it before this date with the green dot. Okay, so if I want the dividend for Caterpillar or Procter & Gamble, I have to buy it before this date. The last day the stock trades before the dividend's paid out. That's the EX dividend date. That's what those little green dots are. You see how many there are? There's a whole bunch of companies paying out dividends. Now, it doesn't look like there's anything here, here, or here, but there's 136. You can't fit them all here. There's 136 companies here. 40 companies there. There's only one on the 18th. That's weird. Anyway, besides the point. So, why are dividends important? Date number 3. Date of record. Date of record is the important date. Whoever owns the stock. Fitz Air, good evening, good evening. Whoever owns the stock on the date of record is entitled to the dividend. Now, I don't want the dividend, but let me get to that in a second. Date number 4. Payment date. Okay. Announcement date. Last day the stock trades before the dividends paid out. The date of record. Whoever owns the stock gets the dividend. And 4th date is the payment date. Whoever. That's when you get the money. So why do I like dividend stocks? Well, let's go back to where we were. Okay. So if I want the dividend for Procter & Gamble, I want to buy it the 14th, 16th, the 2nd, the 11th, the 18th, 17th, 31st, 8th, whatever, as long as it is before this date. Because if I buy it on the 22nd, I'm not getting the dividend. I got to buy it before the EX date. Now, why? Well, just before the EX date, the stock has a tendency to increase in value, which means I know the stock is going to move up just before the 21st. So I like to buy it 2 weeks before. So if I'm going to buy Procter & Gamble, I'm going to buy it on the 7th, 2 weeks before, on a Monday. Why? Because stocks have a tendency to go up in value just before the EX date. So knowing when a stock is going to move is very important. But once you find out when a stock's going to move, well, what are you going to do? It's valuable information, but what do you do with it? Do you buy the stock? Do you buy an option? Do you do a spread? Do you back ratio? A 4-corner spread? A cross-market dividend? What do you do with the information that Procter & Gamble has their dividend coming up in a couple of weeks? Well, the stock price will move up. What do you do with that information? That's the main reason I like dividend stocks, because they move up just before they pay out a dividend. And after they pay the dividend, which means tomorrow and Wednesday, the stock will most likely go down. After the dividend is paid, stocks usually go down. Well, it's a predictable movement. If I know it's going to move at a certain time, that's what I want it for. That is why I like dividend stocks, because they're predictable. Okay, if I know when a stock is going to move, great. Now I want to do a strategy that is simple, easy, predictable, and consistent. Kind of full circle. A simple strategy, one that's consistently profitable, one that I can do every single week. In the absolute worst case scenario, I end up with a company that is consistently profitable for more than 50 consecutive years. Because all these here, have consistently increased their profits for 5 decades. That's 50 years. So I got no problem buying any one of these. But the calendar tells me when to start looking. So I start looking 3 weeks before to make sure I'm buying it at the right time. Now, the interesting thing about that is I don't look at anything else. So this week here, I will look at just a certain stocks that have their dividends coming up. Nothing else. Okay? I don't want to look at Apple if Apple already paid their dividend. Say, Able Model, Cisco, Illinois Toolworks, they've already paid their dividends. I'm not going to be looking at them for another 80 to 90 days when they get ready to pay their dividend again. Because when they get ready to pay their dividend, the stock has a tendency to go up in value. That's why I buy dividend stocks only, because I know when they're going to move. Now, stocks only move for 2 reasons. Okay, you probably didn't know that. 2 reasons. One is called a known reason, a reason that we can set our clocks by. Dividends, earnings, calendars. Okay, certain stocks move just before Christmas. Certain stocks move just after Halloween. Certain stocks move just before New Year's, Easter, 4th of July, Labor Day, summer vacation, kids going back to school. That's called seasonality. Winter, spring, summer, fall. Certain things happen certain times a year. Stocks move accordingly. Certain stocks move accordingly. So if you know when a stock usually moves consistently year after year after year after year, great. Put it in the calendar. Then you'll know, hey, the 21st of April, Procter & Gamble's going to have their dividend. Well, I like Procter & Gamble. Let's buy it. Okay, Amador wants to take a look at MSTY. MSTY. So hopefully, Nirvana, that answered your question. The reason I like dividend stocks is they're predictable and I know when they're going to move. That's it. I know when they're going to move. Oh, second reason. Remember I told you one is a known reason. We know why. We know what's happening. The second is an unknown reason. Okay, very important person in the company dies. We didn't know it was going to happen. Okay, hurricane, flood, tornado, earthquake. That's an unknown reason. We don't know when they're going to happen. Stocks move directly related to unknown reasons. Well, we don't know when they're going to pop up. They can only react to them. So you got 2 choices. React to a stock movement, okay, or 2, make a plan for something that's going to happen. Now, I don't like earnings reports because they're not very predictable. Because we've seen it, and I point it out every once in a while. It's like, all right, well, this company had a great earnings. They beat their earnings. Well, why the hell did the stock go down? I don't do earnings reports because they're not very consistently correct. You would assume a good earnings report, the stock would go up. Doesn't work that way. I've seen bad earnings reports, okay, where everything was terrible in the earnings report, but the stock still went up. I've seen a great earnings report where the stocks went down. So I don't do earnings reports anymore. I do dividends because they're consistently correct. Every 90 days, Procter & Gamble will pay out a dividend. Great. Well, I want to look at Procter & Gamble the second week of the quarter, every single quarter. Because the 4th week of the quarter, Procter & Gamble pays out a dividend. So the second week, I want to look at Procter & Gamble every single quarter, every 90 days. I can set my clock by it. As a matter of fact, that's how I do my trading. I take all the stocks I like, I put them into the calendar, and the calendar tells me which stocks I'm looking at this week. Okay, number 1, find a good set of stocks. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list. Those 5 lists right there will give you 300 companies that are consistently profitable year after year after year after year. Okay, you guys can buy whatever you want. This is what I do. And I'm just sharing what I am doing. Okay, now I'm not sharing it with you for any reason in particular. I'm sharing it with my children and my grandchildren who are not watching. However, when I am gone and I'm no longer here, they will have these videos to go over and say, wait a minute, how did Dad do this? How did Papa G do this? Well, here are all the videos. Hi, guys. Anyway, so Amador wants to take a look at Misty. Well, let's pull up Misty, and I'll explain to you why I don't like it. MSTY. Okay? Now, it looks like it should be good. Okay? High, low, where was it? Where is it? Look at the motion. Down, up, looks great. 21.64. The 21.50s are going for 30 cents, which is over 1%. It looks good. However, let's go. MSTY. Okay? We're going to take a look at Misty on Yahoo Finance. Now, I tell everybody, if you're going to be investing, you're really going to want to have at your fingertips and saved in somewhere on your computer a financial website so that you can take a look at detailed information. All right, so Misty is currently at 21.29. Okay, fine. Well, I want to see, I get two choices. I can take a look at all the quarterly reports and all the annual reports and read how profitable they are, or I can look at just the dividends. Okay, well, I want to look at all the dividends for Misty. Well, I got a minor problem here because Misty's first dividend was in April of 2024, which means this company's only 1 year old. So maybe in 19 years I'll look at it. Okay, 1 year old company, no thank you at all. No, no, double hell no. All righty. Fitzair, good evening. Okay, what's happening over here? Rich Senior, how you doing, Rich Senior? Thanks for joining in. Gurus, when do you cut a loss? I don't have any losses. Is your goal to have your stock called away every week? That's my goal. My goal is to buy a stock, make a profit, move on to the next one. Think about it. Because a stock goes up, then it comes down. Then it turns around, goes back up again, and then it goes back down again. So think of it this way. As a stock is going up, great, I'm taking a profit. Once it gets to a certain point, from where I jump in to where I jump out, I'm only looking for 1%. Okay, and it's usually 4 or 5 days. So yeah, as she's going up, I'll grab my profit and jump out. As she drops, I'll be looking to jump back in once she turns. Okay, so she goes up. I'll show you in a minute, all right? But yeah, my goal is to be called away every single. I have no desire whatsoever to hold on to anything unless it is consistently giving me more than 1 or 2% every single week. Oksana, Kagdala, Borzosta. Okay, anyway, let's keep on going. Nathaniel James, how are you today? Lance Williams, good evening, good evening. Abdul Halim Salah, good evening, sir. Newmont, ooh, Andrea wants to take a look at Newmont. Oh, go. So anyway, back to Misty. Thing's only a year old. No, thank you. Now, I only have 2 criteria on the stocks that I like. 2. Now, 2 is really not that difficult to think about it. 2. 1, consistency of profitability. Minimum 2 decades. The stock market's been around for 400 years. 400 years. I don't think 20 years is too much to ask for. There are companies that we have. Consolidated Edison has been in business and increasing their dividends for over 200 years here in America. Now, I know America's not 400 years old. Yeah, I get it. But the first stock market in 1602, that was the first stock market. First dividend stock, VOC. Okay? Yeah. So I don't think 20 years is that much to ask for. So Andrea wants to take a look at Newmont. Newmont. Let's get out of here. Out of here. Newmont, and you, Newmont. Here we go. High, low. Where was it? Where is it? Look at the motion. Up, down, back up. What's happening here? It looks like it's coming back down again. All right, before we go any further, let's zoom into here. Yep. Sorry, kiddo. Down, up. Now it's coming back down again. Just missed it. Last week or the week before would have been better for Newmont. But 2 weeks ago, it was a little iffy because everybody panicked because that, what was that happened? That tariff scare. Yeah, everybody got scared about tariffs. So no to Newmont. Sorry, kiddo. Jordan Gray, good evening. Collect with Lulu. Well, Collect with Lulu wants to take a look at Mickey D's. MCD, Mickey D's. Okay, here's something, a funny story for you. Okay, now some of you know who was here on Thursday. My grandson was hanging out with us. I went to McDonald's for the first time in about a decade. Not because I wanted to, because my 5-year-old little grandson wanted to go to McDonald's. Can't say no to a 5-year-old, not when you're grandpa. Anyway, Mickey D's, here we go. Here's the high, here's the low, here's where it was, here's where it is. Look at the motion. Down, up, down, up, down, up. What's going on here? Well, let's zoom in a little closer. Is this a good time to jump into Mickey D's? It don't look it. Okay? Down, up, down, up, down. She's coming down. She should come down somewhere around this area before she turns around. And that probably going to be in about a week or two. Wait a minute. Why is my battery not charging? Okay. That should do it. All right. All right. So collect with Lulu. Sorry, kiddo. Going to be a no. It just doesn't look right. John, thanks for sharing. I hold too many tech stocks. Okay, John, the way I look at any stock, if it is not giving me a weekly cash flow, some kind of money on a weekly basis, see you later. Okay, I'm not doing this for the fun of this. I'm doing this for cash flow. Okay, I'm retired. Means I'm too young to catch Social Security. Also, I took a look at what they plan on giving me for Social Security. Yeah, no. Seriously, take a look at it. Okay? Doesn't work for me. Okay, so I have to make sure that the money that I've earned in all my working days is actually going to allow me to live a comfortable lifestyle. Now, it is towards the end of April, which May is right around the corner. Now, normally, I head up into New England for the hot days. Okay, because down here in Florida, it gets a little warm. Yeah, so I'm going to go up to Maine for the summer. Okay, if anybody's up in the area, well, I'm happy to come by. Okay, got a big old estate up there. We're going to be testing out some electric boats. Yeah, and one of my hobbies is converting boats to run on electricity, solar electricity. So as long as the sun is shining, I got a free ride. So that's what I'm going to be doing up on Lake, what is that? Moosehead Lake. That's way up there. So I'm going to be spending the whole summer up there, and I will be live broadcasting, most likely either from the boat or from the farm, one or the other. But I'm looking forward to doing on the farm, on the boat. Can you imagine that? The background will be the starry sky in Maine at night, and just live on the boat. Yeah, that's the goal. So look forward to that in a couple of weeks. All right, 11:22. We got 8 more minutes. Let's answer some of these questions. We've got a lot of questions. All right, let's keep on going. Thanks for sharing. You're welcome there, John. Alfred, how you doing, Alfred? Joseph Catalano. Ooh, I had a mad crush on Michelle Catalano growing up. 4th grade, 1974. Wow. All right, anyway. VP David Graham. I joined Curious Patreon yesterday. When will I get access to the free Google Sheet calendar? Ooh, I got to get that up there. Remind me tomorrow morning. Captain Obvious, please explain the Fibonacci retracement and settings. Okay, well, Captain Obvious, apparently you're new here, because I'm really good with names, and a name like that I would remember. So you're new here. Let me briefly explain what it is I do here. Okay, Captain Obvious, and see if it's obvious to you. Number 1, I'm looking for a simple, safe, predictable, 1% per week. Simple, safe, predictable, 1% per week. Now, the trading strategy that I am showing here was created for my 9-year-old daughter back in 2008. Now, I'm sure you're aware that 9-year-old children aren't the brightest bulb on the tree. So it had to be simple, safe, predictable, consistent, and no way for her to lose. So it was basic, simple information with 5 simple rules. Rule number 1, never buy something you do not want to hold on to for the rest of your life, which means don't buy something you don't understand. Number 2, never sell at a loss. It defeats the purpose of the game. Rule number 3, make sure the company's consistently profitable. Rule number 4, weekly options only. And rule number 5, make sure all the numbers work. What I mean by the numbers is, what am I buying it for? We're doing a covered call, which is a simple, safe, predictable strategy. Okay? Wait a minute. Never buy something you don't want to hold on to. Rule number 2, never sell at a loss. Rule number 3, make sure the company's consistently profitable. Rule number 4, I think I did this already. Oh, and the numbers. Okay, what am I buying it for? What am I selling it for? And is that more than 1%? That's what I'm looking for, 1% consistently every week. Nowhere in that rule book at all whatsoever was the Fibonacci numbers in there. None. Trying to teach a 9-year-old about the Fibonacci, I might as well just talk about the Black-Scholes pricing method about standardized options. And then the Greeks, okay, the theta, the rho, the delta, all that stuff. Options only, stocks and options. Okay, it's kind of a 2-for-1 thing. Never buy a stock that doesn't have an option against it, specifically a weekly option, because I want weekly cash flow. You can't get weekly cash flow on in a company unless you sit there and look at the chart all day. Yeah, no thank you. Okay? Love me some Black-Scholes. Yeah, good luck with that one. Try explaining that one to a 9-year-old. But that was 15 years ago, 16 years ago, however long ago it was. Okay? If you bought General Motors 5 years ago for $43 a share, you'd made very little money. Okay, so J.R. Love, you're missing completely what I do. Okay? So 5 years ago, if I bought General Motors, which I did buy General Motors 5 years ago, I'd buy it for a certain price. And then I'd turn around and I'd sell an option against it for someone to buy it from me at a certain price by a certain date. It's called a covered call. Now, General Motors has weekly options. I can get a return every single week. Oh, I'll give you a great one. Macy's. Okay, now, I made over 50% on Macy's last year. Do you see it? Look, 21, now it's at 10. How did I make over a 50% return on Macy's if it dropped? Walgreens, WBA. WBA. Okay, the high 19, the low 8. How did I make over 50% on Walgreens? Okay, you're under the impression that I buy something and hold on to it for a long period of time. No, I don't. Stocks go up, stocks go down. Stocks go up, stocks go down. If you're watching every single day, twice a day, that's what I do. Twice a day, I watch every single day. Certain stocks that are consistently profitable and have weekly options. I never looked at Campbell's Soup. All right. CPB. Hold on a second. So, with General Motors, okay, if I bought it, I would buy, okay, hold on a second, General Motors, let's pull it up. Okay. Up, down, 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 up, down. I can do this all day long. That's all it does. Up, down, up, down. So if I bought it here, I'd sell it here, and then I'd buy it here, and then I'd sell it here, and then I'd buy it here, and then I'd sell it here, then I'd buy it here, and then I'd sell it here. I have no desire whatsoever to be monogamous to a stock. Okay, that means buy it and hold on to it for 4 or 5 years? Oh, hell no. I'll buy it, and I'll sell it in 3 or 4 days, and I'll make that 1%. Maybe I'll make 2%. But when she goes up, I get rid of it. When she comes back down, turns around, ready to go back up again, then I will buy it. Time frame. Captain Obvious. 1 day at a time. Okay? I don't know about you, Captain Obvious, but I live my life 1 day at a time. Okay? So, buy it here, sell it here. Buy it here, sell it here. Buy it here, sell it here. It's not that difficult. So yeah, if I bought General Motors 5 years ago, I would have done the exact same thing. Because glasses, gotta need the glasses. Trade 2024. Okay, here's the trades for 2024. Here's all of them. 52 weeks worth. I'm gonna go to the bottom because I want to show you what's on the bottom. Okay, now remember I told you I've been doing this for a while? My very first blog post was August 31st, 2011. Now, I've been trading since the 90s, but it wasn't until August 2011 did I start to share my trades. Now, as you can plainly see, what the hell do I have here? HPY, that's, oh, I don't even know what that was. SCLANNAFU. WHOCOHSL. Ooh, Schlumberger. ENB. Cool. SU. Some of these I know. HSS, HPY, HLSS. Wow. That was in 2010. 2013. Well, come down a little bit lower. What's this one? Oh, that's 2017. Oh, here's one right here. 2013, 1 year, 90 days, 30 days. Looking at the exact same thing. Not much has changed since I first started sharing with you guys. Now, yeah, these videos are absolutely horrible because what was it, 2013? What was technology back then? I had a big, huge video camera this big trying to figure out how to do this. Okay, so yeah, I've been doing the same thing over and over and over again. So when I buy something, I don't buy and hold on to it for a long period of time. I buy, get my profit, move on to the next one. The longest I've ever held anything is 9 months. And I didn't do it on purpose. Okay, I think it was, oh crap, which one was it? Kimberly Clark, KMB. So I bought Kimberly Clark, she dropped, stayed on the bottom for a little bit. It took 9 months for it to retrace before I can get back out of it. Captain Obvious. Oh, screener. No, I don't have a screener. How do I choose my stocks? Simple. Captain Obvious. Are you ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those 5 lists right there will give you over 300 companies that have been consistently profitable for 20 years or more. Not Warren Buffett's list because, you know, it's Warren. So if it's good enough for Warren, it's good enough for me. But the other 4 lists, Kings, Aristocrats, Champions, Contenders, yeah, consistently increasing their dividends consecutively for more than 20 years. Those are the only ones I choose. And weekly options. That's it. 2 criteria. So who do we have over here? Don't. All right. A share, you made very little money. Yeah, Junior Love, I'm going to disagree with you. All right, we're going to do just questions. ID, we're going to have to worry about that one later. McGregor, sorry about that. Let's make some money. Raymond, cool beans. Bearings is a decent revenue generator, I think. BBDC. Okay, now, JC, we already looked at it. Okay, 10% a year. Yeah, you have fun with that, kiddo. I like 1% a week. That is more than 50% per year. Okay, I don't do monthlies. We looked at BBDC, didn't work for me. Andrea, James, we didn't finish with consolidated freight. Actually, we did, Andrea. All right, let's go back to, get out of that one. CF. Yeah, we talked about consolidated freight and we talked about doing the 75s. Okay, because I wrote it down. CF came in at 1.7. So we went through the whole thing for CF, consolidated freight, and it came in as a 1.7% return for 1 week. VP David Graham, I joined the Curious Ones group. Okay, okay. When will I get access to Google Sheet monthly list? Okay, David, the monthly lists get sent out every Sunday night. Every Sunday night, we take a look at whatever stocks are up for consideration for that week. That's it. Okay, the Google Sheets, yeah, I got to upload that so that it's easy for an easy download. Captain Obvious, I assume you're trading big stocks, SPY, hell no, QQQ, double hell no. Dude, when Captain Obvious, when I say consistency of profitability, dude, go take a look at SPY, go take a look at QQQ, look at the dividends specifically, or take a look and take the time and read the 20 years of the quarterly reports and the annual reports and see, are they consistently profitable? SPY, hell no. QQQ, double hell no. Okay, when I say consistently profitable, that means each and every single number is higher and higher and higher and higher. Okay. Thank you, sir. Have a good night. You too. How can I turn 1K into 10 out of 0? Okay, take 1K and you separate the 1K with a 0 and just slide a 0 right in there, and there you go. Just change 1K to 10K. You're in, okay, Bronx Batman, you ask a question like that, you're definitely in the wrong place. Okay, this is not, going from 1,000 to 10,000. Okay, no, you're in the wrong place, dude. Don't you have to be a day trader with the 25 grand to do so to wash sale? No, the king of TikTok. To be a day trader, yeah, you do have to have $25,000. I'm not a day trader, okay? I buy on a Monday, I sell on a Friday, more than likely, most of the time. Not always, but most of the time. Questions. Okay, David, tomorrow morning, when you get that, you're going to get an invite first thing tomorrow morning, right around 8 o'clock, okay? At 9 o'clock, we sign on. After we take a look at all the trades for the day, at the end of the live show, I'll say, are there any other questions? Does anybody have anything they want to take a look at or discuss? Bring up those subjects and I will make sure that I'll have the answers for you tomorrow morning. Yes, JC, compounded, it's more. I get it. But you're still missing a big thing, JC. Oh, I see. Now you have 2 phones while you are recording with your stocks. No. I actually have 6. I got 6 phones. Okay, each one is tuned to a different channel. And I have a webcam down here attached to the computer, which is going to a software, which is broadcasting out to a other bunch of channels. So it's about 8 or 9 different channels at the moment that we're broadcasting to. Hannah Peasant, how are you today? Thank you for that. Thank you for that. Uh-oh, I missed some questions. The king of TikTok, good to know. So you buy these and hold for more than a day so you don't get labeled as a day trader? Absolutely. Or a pattern day trader? Absolutely. What's your program or Discord, or how do we get your list? You got to actually have to join the morning trading group to get access to my Discord, because my Discord is a paid Discord. Okay, it's specifically for the morning trading group. Curtis, what is the amount you need to start trading with for your program? You can start with $5. It's not that complicated. Okay, my grandson started out with $50. Okay, of course, he's only 5 years old, but anyway. Let's keep on answering these questions. Tony, how you doing over here, Tony? Just wanted to say hi. Let's keep on going. All right, John Butler, thank you. Robert Williams, thank you. Hannah, all righty. Deep fried pig butt cheeks. Wow. Where the hell did you ever come up with a name like that? Are these rolling stocks? Sometimes yes, sometimes no. User 6814622, blah, blah, blah. Let's take a look at Coles. We'll have to take a look at that tomorrow. Amador, how about Misty? Amador, we already looked at Misty and we already figured out Misty's the no. Curtis, cool, thank you. You're welcome. All right, Brad, Annalie. Ooh, Brad, catch me tomorrow. We'll look at Annalie tomorrow. User 6814622. You can get a lot of shares of Kohl's for $250. Yeah, I know. I actually have a bunch of Kohl's. Can't phase a king. Is it on sale right now? Okay. Oracle looks like a falling knife. Okay. Mr. Pibb, DSGR. Oh boy. JC, you still kicking me for that interesting scenario you're working with, 33%? Okay. I get it, JC. You like what you like. There's absolutely nothing wrong with that at all. Lisa, can we look at Campbell's tomorrow? Well, let's do it really quick. CPB. No. CPB. Yeah, I was right. CPB. All right. The high, the low, where was it? Where is it? Look at this. Up, down, up, down. Here we are at 37.57. So we'll be looking at the 37.50 they don't have. So the 38s, 50 to 45, the 37. Yeah, no. Sorry, kiddo. Okay, Lisa? You see the numbers? Okay, 37.58. We'll be looking at the 38s. The 38's going for 15 cents. Terribly sorry, kiddo. 15 cents is like 0.5%. No, don't get me wrong. 0.5% a week is still 26% a year. But think about it. Why would you invest for 0.5% a week and only getting, 26% a year when you can find something else that pays better? Don't get me wrong. I like Campbell Soup. I do. Just the numbers aren't that great. Ivan, 25 DLS weekly, $25 a week. Okay, Ivan, I'm not quite sure what you mean by that. BMY, Bristol Myers Squibb, is dripping maybe next week. Okay. JC, earnings days, EX days, etc. Okay, JC, I have no idea where you're going with that, JC. Curtis Landry, how do you choose your strikes when buying a call? Okay, number one, Curtis, listen closely. I don't buy calls. I sell them. 80% of all options expire worthless. With that kind of a track record, why would I buy them? Think about it. If 80% of every call option expires worthless, why would I want to buy? I have an 80% chance of losing money. So no, I'd rather sell them. So I sell call options. Okay, now buying call options is a lot more risk and a lot more profitability. However, risk and reward go together. Okay, you buy options, 20% of the time, you're going to be right. Well, that doesn't work for me, especially where I am at this point in my life. Ishmael Moore, good evening. Nice to see you back again. You've been gone for a while. Oh, so Chris, how do I pick my strike prices? Okay, now, Curtis, you're going to find this so elementarily simple that you're going to feel a little silly. Okay? If the stock is at 39.03, I'm going to pick the 39. See? 39.03. I'm going to pick the 39. It's actually that simple. I pick the closest strike price as long as it's profitable. So, Campbell Soup, the asking price is 39.03. I would do the 39 strike price. AT&T. Okay, AT&T, $26.53. I would do the $26.50. Okay, think about it, Curtis. If the stock is $26.53, I'm going to pick the strike price, $26.50. Okay, General Motors, $44.96. I'm going to choose the 45. I'm going to choose the closest strike price and make sure the numbers work. Am I getting more than 1%? You know me, MPLX. Never heard of it. MPLX. 49.22. Okay. Monthly. 16 May, 20 June, 19 September, 19 December. That is a monthly optionable stock. You know me? No. Hey, 86 is in the house. I was just on 2 platforms. Okay, Bill. Carl, how are you doing? Bill? So James, QUBT, a no? Absolutely a no. Sweet Den, how are you doing? Sissy B, ooh, you're new here. JC, I'm going to agree with you. That's wonderful. Compounded, it's only 107 years for you to double your money. Oh, that's pissa. Okay, I'm sure I can wait until I'm 107 years old. Wait a minute, I'm already 62. So, wait a minute, no, I'm 61. Okay, so I'm already 61. So you're telling me when I get to 168 years old, I can double my money? Yeah, no. Amador, do you sell before expiration date? I like to sell before expiration date. He sells covered calls and holds until the expiration date. Thank you. What are your top 3 dividend stocks you park your money? I don't park my money. My money's always constantly working. Did you know that Carl Jung was a storm chaser that passed away from El Nino tornado warning? Okay. Curtis, any thoughts on Intel? I love Intel. I actually own some Intel. Thanks for calling, was with the dentist. Oh, hey, that happens. Bill, 195,494. I have no idea what that means, Bill, but okay. Karate Kid, can you explain how taxes work? Yeah. You get screwed when you wake up. You get screwed when you walk out of your house. You get screwed when you jump in your car. You get screwed when you come home from work. You get screwed when you go to work. And you get screwed when you lay your head back down to go to sleep at night. Taxes mean they'll tax every opportunity they possibly can. Kenny Moe, Zim. Seriously, dude, check out the profitability on Zim. You'll change your mind, too. Many thanks for the detailed response. You're welcome, Nirvana. Christopher D. Tomoso. Ooh, have you ever driven a Di Tomoso? Those are nice cars. Age 17, whatever, thank you. Morhar, okay. It's my favorite. Okay. Bill, I feel bad for you if you think Zim is a good stock. What's the September 6, 2024? I have no idea. Bill, tell me what's the stock for West Side? No idea. Bill, Polestar Automotive Holdings, American Depository Shares, Class C1. All right, Bill. What? Where do we get the dividend calendar? Okay, Amadora. The dividend calendar is with Think or Swim. So if you are going to trade with Charles Schwab, this is free to use, okay? Or you can just go to Google and put in EX dividend calendar, and there's a whole bunch of them there. Club Med Tom, good evening to you too. King, what are your top 5 companies that you've sold weekly? Okay, Mark, Trike, good evening. Larry Brown's in the house. Uh-oh, that's it. We are at the end. That's all the questions. Done for the evening. Cool beans. All right, so that being said, you guys have a great night. We're going to do this again, same bat time, same bat channel tomorrow. So you guys have a great night. I trust your opinion for your dividend stocks. Thank you, Bill, even though some of your comments would sound contradictory to what I'm saying. But all right, I'll take your word for it. So, Tony, thanks for stopping by. You guys on Facebook, have a great night, and we'll see you again tomorrow doing the same thing. You guys here, we'll see you again tomorrow also. And Instagram, you guys have a nice night. See you guys tomorrow. TikTok channel number 1, you guys have a great night, and we'll see you again tomorrow. TikTok channel number 2, you guys have a great night. See you tomorrow. You guys over here on YouTube, have a nice night. See you tomorrow. Thank you very much. I hope your night goes well. Okay, Lisa M, we'll chat with you tomorrow. Cool beans.